Hello everybody, welcome to another episode of Erickson TV. I wanted to talk about, as we near the year end and people start thinking about next year's tax filing, about the chances of being audited and also about current audit trends. I was looking at the most recent IRS guidelines for the amount of returns that they're auditing, and if you're an individual and your income ranges from 0 to 200,000, as of the last report, there's about a 1% chance of being audited, which sounds pretty low. But the current audit trends that I'm seeing is that they're doing specific audits by mail, where they're looking at a specific deduction, perhaps your charitable contributions, or perhaps your miscellaneous itemized deductions, or perhaps they're matching up the 1099s for like your investment accounts. If they're seeing something that's either a large item or they're seeing a mismatch of some type of income reported, the computers are automatically sending out an automated IRS notice of a discrepancy, and they're asking you, the taxpayer, to prove that they're incorrect. So they're basically saying that we're right until you prove us wrong, is what they're doing there. If you are a business owner and you file as a sole proprietor, if your income is between $25,000 and $100,000, your audit risk goes up to 2%. And if your income is $100,000 or greater, your audit risk goes to 4.2%. And the current audit trends that I'm seeing is that the IRS are doing what's called selective audits, and so they're looking at your business and they're picking certain deductions. They're picking certain deductions like maybe your vehicle expenses or mileage. They're picking your supplies expense, or office supplies expense. And what they're doing is they want to see a detailed record of your receipts and how you're arriving at that number. Last but not least, I wanted to talk a little bit about record keeping. If you feel like, for instance, if you have a business and you've been claiming vehicle expenses or vehicle miles, we have some. If you're worried about how you're documenting that, I have some tips that I can send to you to simplify that, and also the ideal type of log to keep. What I found in practice is the IRS has actually been pretty flexible about what they'll accept as proof of your vehicle miles. So for instance, if you keep like a calendar, even if it's on a spreadsheet or some type of computerized calendar, that will often be sufficient to support your miles. And then the takeaway from this is that to be proactive, keep good records, and then if you do get audited, that's part of my job and our firm's job is to help you get through that audit. I can represent you, and so you don't even have to show up if you don't want to. But if you get like one of those nasty notices in the mail, we are very good about addressing those and helping you solve that problem. So I wanted to bring up this most current thing that we're seeing in audits, but not to get you worried, but just also as a word of caution. Use this slow time, this after you get through the holidays. Use this New Year's resolution to maybe take a look at how you're keeping your records and do a little bit more thorough job, just to be ready in case you're that 1 or 2% chance of being audited. Have a great day. We'll see you soon. Have next time on Erickson TV. Bye now.